Hello all, welcome back to our channel. Today we are going to discuss about capital gains versus cash flow. So this is a very important video for people who want to invest in real estate. If you do not know about these two things, you will be missing a lot of returns and you will be missing opportunity as well. So for that reason, I have come up with this video to help you understand difference between cash flow and capital gains so that you can make use of make use of these two important elements in the real estate investing, and you need to consider these two if you want to invest in real estate or if you are really looking to grow in real estate. So cash flow is also important and capital gains also important. So managing both of these are crucial in real estate investing to make real estate investing success. So stay till the end of the video so that you can get maximum benefit and you can increase your returns and grow your wealth. So hi, I'm Durgam Satyanarayana. I am on a mission to help 1 million people build generational wealth through real estate investing. So if you are coming for the first time, if you have not subscribed to this channel, please subscribe to this channel. Hit a bell button so that you will not miss important information related to real estate investing, because the real wealth is real estate. And cash flow versus capital gains in real estate investing, these are two distinct concepts but offering different types of financial returns and benefits. Here is a breakdown that I'll take you through. First, we will discuss about cash flow and then capital gains, and then we will understand the difference between these two. First, we will understand what is cash flow. Cash flow in real estate refers to the net amount of money generated from a rental property after all expenses deducted. Like expenses can be debt, maintenance, taxes, anything that comes under expenses. Cash flow has some characteristics. So let us understand characteristics of cash flow so that you will get some clarity on the characteristics as well. And the characteristics is you will get regular income. If you buy or if you invest in a cash flowing property such as a rental property, there are certain conditions to be followed to find such properties, because the cash flow property can be positive cash flow, can be negative cash flow. So you need to find a positive cash flow property. Like after you deduct the expenses from your income, you need to have that cash flow coming in, that is your positive cash flow. If you're not getting positive cash flow, then you are missing out returns. So for that, you need to find a regular income cash flow properties, positive cash flow properties. So first characteristic is regular income. You need to get a regular income so that you can cover up your mortgage and expenses so that you can make some profit out of it. So that is a regular income. And the second is once the passive income potential. It has a lot of potential compared to other types of income. So there are three types of income, like ordinary, portfolio, and passive income. Passive income is very important to get financial freedom or financial independence. So passive income is ongoing income without your involvement. It will give you passive income in even in your absence. Even if you don't work for it, it will give you a passive income monthly or quarterly. And the third characteristic is stability. Cash flow tends to be more stable and predictable. You can predict what is the income that you are going to earn in the next month through rental income or passive income. And fourth is tax benefits. So if we have passive income properties like cash flow properties, you have tax advantages as well. So that you need to talk to your tax consultant so that you can get benefits out of it. So, and fifth is less dependent on market conditions. Because you are investing in a cash flow property, it has less impact from fluctuations. So this is also very important characteristic of cash flow property. Next, we will go to capital gains. Hit a bell button so that you will not miss important information related to your generational wealth. So this channel is designed to help you build your generational wealth so that you can pass security and wealth to your next generations, such as your children, your family, who are dependent on you. Next, we'll talk about capital gains. Capital gains in real estate profits when you buy a property at market price, you will sell the property later so that you will make some profits. So this is capital gains strategy. So for that you need to wait for some time or for years, or you need to fix the property, you need to renovate it, you need to modify it, you need to upgrade the property so that you can sell it for profits. So this is called as a capital gains. So if you invest in a property and you wait for a few years so that the property will appreciate in value, then you will sell the property. But for capital gains you need to do it repeatedly, you need to sell, you need to buy, and you need to sell the property. You will only make capital gains or profits when you buy and when you sell. You need to continuously do this, you need to actively involve in this to make profits in capital gains. What are the characteristics of capital gains? Potential significant returns. Capital gains provide substantial profits if a property is purchased in a growing market or potential market, sold when properties value have increased. And the second characteristics is long-term growth. Real estate investors often rely on capital gains as well for long-term wealth accumulation, especially in markets with a strong appreciation potential. And the third characteristics is it is dependent on market. So capital gains are highly dependent on real estate market conditions, economic factors, political factors, or location, and properties values can fluctuate, affecting the potential gains. Fourth is tax implications. So when it comes to capital gains are subject to taxation, because when you sell the property you need to pay taxes that are higher. So when you sell you need to pay taxes, and long term taxes can be lower, but in the short term you have to pay taxes. Even in the long term you will have to pay taxes, but that can be lower. It depends on the property type and all that. And fifth is liquidity risk. Real estate is not as liquid as other investments. You need to understand this as well. Like stocks, selling a property can take a time, and the market conditions significantly impact the ease and profitability of the sale. The first, we will understand each aspect, then we will see cash flow, then we will see capital gain. The type of return, regular income from rentals is cash flow, and capital gains, you will gain profits from the sale of the property. You will buy a property which is a rental property, positive cash flow property, and you will make money from that. But capital gains you need to involve actively. The timeline is short term. In cash flow properties you can have a monthly income or quarterly or half yearly as well, but you will have income coming in. But when it comes to capital gains, you typically make money upon sale, and it can be one time profit. But when it comes to risk level, cash flow properties have generally lower and stable characteristics in nature, but capital gains have higher and depends on market conditions. The risk is higher when it comes to capital gains, and when it comes to cash flow it has lower risk. And tax advantages: income tax with potential deductions when it comes to cash flow. When it comes to capital gains, there is a capital gains tax. Cash flow, it, you can have deductions when it comes to taxes. And most of the investors focus is income focused investors invest in cash flow properties. Growth focused investors invest in capital gains. So hope you got some value from this video. So what kind of investor are you? Are you investing for capital gains or are you investing for cash flow? So please write that in the comment section. And if you want to learn more about real estate investing and wealth building, you can join our community. You can learn the real estate investing and master the art of real estate investing from the link in the bio. So we have webinars keep coming. So the webinar is for free. You can attend, and please share this with your friends and family members, because many people they invest in real estate. Most of the people they do not understand which is best. So for that, this will help such people. You should know what is best for you. It depends on your personal goals. It depends on your interest. Let us see which is better based upon our experience. And the choice between cash flow and capital gains depends on investors' goals. As I said, it depends on investors' goals and risk tolerance, and depending on the investment strategy. Cash flow is for income focused investors, and capital gains is for growth focused investors. Cash flow is suitable for the people who are seeking steady and reliable income, possibly for retirement or financial independence or even financial freedom. Capital gains are ideal for investors aiming for long term appreciation and who are comfortable with market fluctuations and potential risks associated with property value changes. Combining both strategies, many real estate investors aim to combine both cash flow and capital gains to balance immediate income with long term growth. By purchasing properties that generate cash flow, and the properties are located in areas with strong potential for appreciation, and investors can achieve both regular income as well as significant returns on investment. If you are interested in learning about real estate investing, you can join our webinar from the link in the bio, and you can learn and master the art of real estate investing and become a real estate investor. And if you have not subscribed to this channel, please subscribe to this channel. This channel is about your generational wealth. So if you want to build your generational wealth for your family and for your children, and if you want to leave a legacy, then you can join our program and our community. You can learn about real estate investing, and also share this with your friends and family members so that they can benefit from this video. So stay tuned. See you in the next video.